Joining us now to discuss the quarter, Cowen analyst Max Rakhelenko, who's got a buy rating and a $440 price target on the name, and Coresight Research CEO Deborah Weinswig, who was ranked the #1 analyst by Institutional Investor for 10 years in a row. Thank you so much for being here, both of you. Max, let's start with you. Just kind of your broad thoughts on the quarter. The company did reaffirm guidance here, which suggests a pickup in the second half of the year. But how incumbent is that pickup on, say, at least a few rate cuts?
Great. Thanks a lot for having me on. So in general, first quarter was a little bit softer than expected. Same-store sales missed by a little bit. Weather, unfortunately, was once again a headwind this year, as it has been the past several years. And then there's a little bit of, there's some ongoing softness from deferral in big ticket project spend. So a little bit of a miss on top line. That was somewhat expected. And then the company did do a really nice job of managing expenses, especially gross margin. So that was quite nice to see. In general, as we think about the next couple of quarters, I think a lot will be dependent on, can we get weather to hopefully improve, as pockets of the country that have seen better weather certainly did see nice pickup on in that weekend business. And then second, just what's going to be going on with the rate environment and whether that's going to drive potentially somewhat of an improvement in some of those big ticket categories.
Deborah, what does this say about the state of the consumer? Are there any insights we can glean in terms of the way and appetite that the consumer has to spend on home renovation projects?
That's a great question, and thanks for having me on. I think, number one, if you think about the fact that they're using debt in some cases to finance this, there's much less of an appetite around that. Number two, we continue to see weakness in big ticket pretty much across the board. And three, they did say, this was kind of the one kind of call out or watch out to me in the quarters, that they were seeing some categories which were on a kind of 2-year basis much weaker than they would have expected. And so I would say that there is, when it comes to big ticket, we have not seen the rate cuts that many people had expected. And we're actually, one of the numbers I think that's also critical is that we're at the lowest rate of housing turnover that we've seen in potentially, history. And so without people buying new homes, there are also a lot, there's no pent up demand because we haven't seen the housing turnover as expected. So I think that is, in the home improvement category specifically, some of the challenges we're facing. When we look at it from a macro perspective, I would say that the lack of rate cuts and having to use debt to finance some of these projects are really holding us back.
Max, speaking of debt to financing certain things, what do you make of the SRS acquisition? That was, of course, announced toward the end of the quarter. $18.25 billion enterprise value here, dilutive on a GAAP EPS basis.
Yeah, we're actually quite positive on the SRS acquisition. All the work that we've done around the company has been quite positive. Obviously, this is the largest acquisition that Home Depot has ever made, and they certainly, you could argue, paid up for the asset. That being said, SRS is a phenomenal company. They've done a really nice job over the course of its history. They do a really good job on the technology side and really integrating a lot of the acquisitions that they've made. And really, it's that technology capabilities that I think is going to be interesting for Home Depot, as it is certainly one major area where they'll be able to leverage SRS and all their capabilities.